What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is October 16th of 2020. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, I want to spend some time to break down a lot of the unnecessary FUD in cryptocurrency markets. There's a big misconception that I've seen over the last year or so in crypto, as there's been some correlations between certain markets or certain indexes that leave people to believe that it's the ultimatum for Bitcoin or other asset classes to perform a certain way. And I want to go ahead and kind of dispel this misconception throughout the video. So we've got lots of things to discuss as we go throughout the video. Let's just go ahead and jump straight into it. So taking a look here over the last 24 hours here, we can see cryptocurrency markets in relatively negative territory more than anything. Not to any severe degree. Most coins are down following Bitcoin around 2 to 3%, so slightly into negative territory. But I want to go ahead and mainly just start on this article here that I think really contextualizes the point that I want to hit on. There's an article here from Bitcoinist.com saying more pain for Bitcoin ahead as price breaks the legacy trend line, says analyst. Okay, so this is one of those articles where they might take a piece from someone like myself or some other content creator in the crypto space or some kind of trader on TradingView where, again, this isn't, analyst can be a very broad term, right? It's not like, some big institutional investor on Wall Street. So this was a chart that they put out here that I always love seeing other people's perspectives on things because I think this is interesting. So on the chart here, they showcased the inverse correlation between the Dixie in this case, which is the dollar weighted index in this case that measures the dollar's performance against other world currencies such as the Japanese yen, the British pound, the euro, the Chinese yuan, you name it. It measures against a whole range of different currencies across the board. So generally speaking, when the Dixie goes down, we've seen that Bitcoin goes up, right? And just to be clear, when the Dixie is going down, the DXY, in this case, the dollar is performing worse against other currencies. And in this case, we've tended to see that Bitcoin rises, at least back here since March, while the Dixie's been going down. But there's a few things I want to point out here. Now, not only on the sense of TA here do we see that the trend line is showcasing that, we're at a really bad point here where supposedly Bitcoin is now making this line of previous support here that set at a support level here and was broken here is now starting to act as resistance. And we're starting to see with this trend line here that the Dixie, in this case, if we take a look at the chart, is now starting to make its previous line of resistance support. Now, there's not only a lot of small tweaks here that I want to talk about here. Now, I honestly make mistakes as any trader does, but I do want to say something very clearly here, and that is that for their Dixie line of resistance here, right here from the absolute peak here down to here, this really isn't being made into support. The line's a little too inward if you're actually taking into account the wicks here. In this case, there's really not a consistent break in the line of resistance or really a line of resistance here in this case, right? It's still at play here, right? I would say in that case. But small things like that in TA are really not my favorite thing. And that's not my point here I want to talk about, right? I can respect, some different ways about drawing trend lines. What I want to talk about here is a much better way to naked trade or utilize support and resistance. And that is just simply focusing on the significant price levels. So one thing that we did recently on my channel that I talked about a lot is I talk a lot about the treasury yields and how we're going towards negative yields on treasuries in the United States, much like other government bonds across the world. It's a signal that the Federal Reserve is going to be staying 0% or is going to most likely be exploring negative interest rates going into the later part of 2021. Now, the important thing to focus on here is not always just, support and resistance lines. As we talked about, they can be very subjective here, right? You can start to draw trend lines however you want. You could be looking at the logarithmic chart. One of the things that I always look for here that's very, very important is to focus in on the significant highs and lows. And specifically, when we've been on a downtrend, I like to focus on the significant lower highs, okay? Because when we can focus on that, we can see very clearly, the market has made it very, very obviously clear that any significant time that we've rebounded, we've set in lower highs. And then what you start to see is after we have multiple lower highs at relatively similar price levels that signal buyers are not passing through the previous price, right? Again, this is an index, but this is generally showing that people are paying less for dollars against other currencies time and time again. then we can see here in this case that we start to go down through significant downward turns. And once we rebound and have a significant lower high, in fact, this is more of like a double top here, right? Then we start to go lower. Now, what we've got here is what many people think is a Dixie rebound. And again, in this case, we're still setting in a relative lower high here. We have not broken past the highs here in September, which are still far below where they were in July. And until we start to see a higher low and a higher high, in that case, I'm not very interested. But even this, right, even this point here, guys, I'm not trying to be biased. I'm just sharing with you the things that I look for reversals. I don't just look at trend lines. And the same would go here for Bitcoin, right, about people getting excited about Bitcoin. If you actually want to take a look back at Bitcoin on this principle here, people only started to massively buy Bitcoin when it broke above its previous resistance and set in a new all-time high, or excuse me, a higher high in this case. My apologies for the misspeaking there in that case. But you can see here that Bitcoin pushed sideways until finally it broke above this point of resistance here back in November. This was the last relative high, and then months following we set in lower highs here or around the same range, and then bam, we set it, and that was the trend reversal, right? No trend lines, no like very basic level kind of analysis here. Again, or I would say no complex analysis really needed here. We're just simply focusing on when we set that higher high in and also maintained higher lows. Now, even this, guys, all these principles that I just shared with you are not my central point here. I know I'm like probably dragging you guys on in this case, and I apologize for that. Sometimes it takes some time to share your thesis on things or your kind of perspective. My point here that I really want to drill home, and I mentioned it, I kind of hinted to it at the beginning of the video, is that as much as there has been a significant correlation, I'd say more than anything, with the Dixie or the DXY, the dollar index, with the performance of Bitcoin, and an inverse correlation, right? An inverse sense of performance, right? Bitcoin does well here when the Dixie goes down. Just because the Dixie might be having a trend reversal here, as much as it is definitely something we want to consider, it is not an ultimatum for Bitcoin as an asset. This correlation has just started to really formulate, or has just so happened to have happened during this time since March. There is no absolute direct correlation with the Dixie or the dollar's general performance against Bitcoin. In the longer term perspective, over the last 10 years, the Dixie going up or down, like it did, for example, Dixie went here from January 2018 here to March, right? No direct correlation with Bitcoin. Take a look back here from 2014 to 2016, right? Bitcoin did phenomenally well during this time. It broke past its all-time highs and rallied into 2017 doing phenomenally well. It going from 80 to 100 shouldn't happen. We shouldn't see the Dixie going up that much. So again, what I don't like is, as much as, for example, Bitcoin is going to hold much more relevancy against the dollar over the next few years, and the Dixie is going to be a very valuable indicator or index in a sense that we want to watch, it's not an ultimatum here. Bitcoin has done phenomenally well in the long-term sense. If we're taking a look here, I just want to make sure we're looking at Coinbase. If you look at, for example, I'll pull up BLX here, and then I'll come back. Let me just make sure I've got my chart saved. If we go here to BLX, Brave New Coin Liquid Index, take it here to the log chart, right? Bitcoin has done phenomenally well. You don't need me to tell you this. It's set in higher significant lows, and again, that's the important point here, and higher significant highs with each cycle. With each cycle that has not been tested yet, that has not been challenged. Bitcoin has continued to clobber through and way outperform how the dollar is performing against other currencies for that matter. But I digress here. What I want to focus in on is I want to go ahead, take a look at some of the short-term price action and talk about what really matters here, what price is telling us. So what it is telling us here is something quite interesting. If we take a look at the chart here, again, we're pulling back here on price. For Bitcoin, we've had a down day of about 1.68%. And along with that as well, for Ethereum, we've had the same thing here. We've had about a 3.34% pullback. But what's really going on here is naked trading. It's price levels here. It's resistance and support. So we've had higher lows here, right? And we've been able to set in higher highs. Now it's time to solidify that before we really kick off in the rally. And what investors are looking to see is if we'll be able to hold this same level we did last time, right? Before we eventually collapse through. So the question here is whether or not we're going to be holding it this time around, right? If we can challenge through this level here and eventually get a breakout on this more relevant short-term line of support. This is on Ethereum here. The same goes here for Bitcoin. Bitcoin has been setting in these higher lows. We finally set in a higher relative high compared to the last one back in September. And now we're going to see if we can make that support, what was previously resistance, set in a new high, set in a new high for the higher low in this case, and then start to break out and start to challenge towards some really significant price levels, breaking above the all-time highs eventually sometime in 2021. Again, this is just a rough estimate here. It's a rough estimate. It's not meant to be factor, kind of proof of where price is going. The more we move away, the less relevant this line becomes. This is more speaking to what I want to talk about. Now, there's one last thing I want to give as a bonus discussion, and of course, it's a very controversial one, and that is everyone's pain point or fear point about the election coming up in regards to affecting Bitcoin's price. Okay, so again, I know this is a very controversial topic, as it always is. Politics, especially in the United States, is not something people like to talk about. But I'm not even here to talk about politics. I want to go ahead and talk about this general talking point, this fear point, the FUD point that the election is going to be either great or it's going to be turmoil for Bitcoin. Okay, so basically leading to existential volatility. This is, again, another point that gets mentioned within the article. If I go back here, talked about the fundamentals, agree here that rising stock market volatility to heavy election, with the correlation of Bitcoin to the stock market is going to lead Bitcoin to go down. Okay, now I would say that the point here that maybe the correlation or the general negative reality of assets could weigh down on Bitcoin. I would agree with that. If equities were to drop significantly, we've seen that in overall markets when capital is going back to dollars for safety, right? I get it. That's what some people are going to argue here. But I got to tell you guys, I really stand in the confident belief here that the election is not going to affect stocks that much, no matter what side comes in. I really don't see that being a cause for concern for equities, because what's been driving this rally and what we've learned very clearly, whether or not there are going to be a revoking of the tax cuts, or if there's going to be some form of healthcare policy or some kind of policy proposed from one of the two candidates, we've learned that central banks are going to do everything in their power. They've been doing it for more than a decade to keep these markets up. We know through the treasury yields, through the CME markets, that negative yields are coming very, very soon. And now it's just a matter of time. So keeping this in mind, right, they're going to enact these kind of policies. So again, we realized here that that's not what drives equities. So, sorry, I was getting a phone call, guys. Anyways, I want to go ahead here and talk about something very, very important to just kind of showcase, in the sense of history here, how elections play a role or don't play a role here. Can you tell me what day here, right, on this chart here, not looking at the dates down below, don't cheat, what day during this chart here, this is back in roughly around 2016, towards the election season, which one of these days was where the actual election happened? Can any of you maybe recall that? Do any of you remember? Maybe some of you were trading crypto markets like myself around then. I was watching crypto at the time. That day was between these two candles right here. This is November 8th. The election went into the late night. When the election finally came through and Trump had won, price of Bitcoin shot up a little bit. Closed off at around 1.7% for the day. At its peak, a little around probably like 3%. Might sound like a lot, but you want to know what other days where we had that same kind of price action? And bear in mind, we're doing 2 days, which is actually kind of cheating in a sense, to try to build a narrative that there is volatility. Well, we had a 4% day here. We had a 7.65% day here. We had a 4.25% day here. We had a 3.68% day here. We had a 3.5% day here, a 4% day, a 3.73% day. Back here, we had a negative 2.47% day with increased volatility if you include the wicks. And along with that as well, a 4% day. Folks, I can't stress it enough. As much as equity markets have ballooned, I think what you have more of a fear of is the central banks of the world deciding that they're going to somehow pull back monetary policy, which I think we know very clearly isn't going to happen anytime soon. So again, my whole point here is I don't want you guys being fearful over unnecessary things. I know I rambled today, but I wanted to try to talk about a lot of things that I know has been on the mind, things that have been on the minds of people across the crypto space and across the financial world as they're looking at Bitcoin as an asset. Here's what I'll say here. Markets are determined by inflows and outflows. If there are significant inflows into a market, the price of the asset is going to go up. Doesn't matter if it's rational or not. People are paying a price for something. More money coming in, they're going to be paying likely a higher price. The point that I want you to take away here is that when you see Square or MicroStrategy buying, $50 million or $400 million of Bitcoin respectively, you have to ask yourself something. They're doing that into this time period where everyone's so fearful here. Oh, Bitcoin, oh, the election, and oh, the correlation with the Dixie. Do you think that that's really going to impact their positions? I don't think so. I don't think that it's impacting. If anything, people are taking a net long position going into this fearful time period where we're uncertain about who's going to be president or we're uncertain about the future of the United States. We're a very divided country right now. I wouldn't disagree with that, or at least in the political sense, right? All these things are happening, and it seems like more and more companies are buying Bitcoin, interestingly enough. Again, I'm really trying to see it the other way, guys. I don't like to be biased here. I don't have an allegiance to crypto markets. Sure, I've got a channel that's mainly focused on crypto, but I can go trade equity markets. I can go trade any market I want. I'm not regulated to this space, right? And I can tell you guys, I'm not really positioned much in equities. I'm not positioned much in cash because the monetary policy doesn't reward me for doing so. Plain and simple. No matter how much volatility there is in crypto markets or equity markets. So, anyways, guys, I hope you all enjoyed this video. I hope you see it as kind of a thought-provoking piece here in this case to just kind of showcase that a lot of the times headlines can get you thinking one way when in reality the charts say otherwise. All right, guys, if you like this video, drop a like, hit the subscribe button if you want to see more content like this, as well as the bell icon. And if you have something to say, leave it down below in the comments, whether you agree or disagree. I want to get a conversation going as always. But until the next video, everyone, I'll see you all in the next one. Take care, everyone.